Good evening, everyone. I hope you're having a great day. For those of you that were just at the Academy webinar before this, welcome to the association's webinar. I am Molly Tennant. I'm the Executive Director here at the RAL National Association, and I am your go-to gal for everything. I'm here with Bob Rao today, and he's with Family Solutions for Care, and we're going to be talking about long-term care insurance and understanding the complexities of that, right? I think there's probably plenty of you out there who have dealt with long-term care insurance. Either you had a loved one with it, or you have the program, or you own a home and you deal with it in that way. So he's going to make sure you guys understand how to take advantage of those benefits and how to understand those policies and do those claims properly. So Bob, you can take it away from here.
Thank you, Molly. I assume you can hear me all right?
Yes, I can hear you. Can everyone else hear us? Go ahead and type in that questions bar on the right-hand side if you can hear us. Yes, they can hear us. We're good to go.
Okay. Well, thank you all very much for joining tonight. And Family Solutions for Care is going to take about 30 minutes and take you through an understanding of what we can do to help extend residential assisted living occupancy for people that have long-term care insurance. Again, my name is Bob Rao. A little bit about our company. I'm in the Philadelphia area, but the bulk of our critical mass is in the Kansas City area. And there we go. Technical difficulty solved. So who we are. So basically, Family Solutions for Care are consumer advocates for people that have long-term care insurance claims. We do not sell long-term care insurance. All we do is assist people that have claims with policies that they own and that they need to use to begin getting the benefits that they deserve. Our founders were David and Wendy Reinhardt, and they both came out of the industry, having spent almost 20 years with Genworth. You may recognize Genworth as one of the leading and largest people that had provided long-term care insurance to the industry. And Wendy sold the product for almost 20 years and was really a rock star and did very well, got to know the industry and a lot of people very well. David was involved in management. And like a lot of people in this industry, Wendy went through a personal experience where she was trying to help a loved one use their benefits that they paid for many, many years. And in that process, she found out how the industry that she helped build became so difficult to navigate and to use for people that really just wanted to get the care that they deserve. And Wendy comes from a very compassionate background. She was an ex-executive director of the American Red Cross, so she's really a give back kind of person. And she got the idea for Family Solutions for Care as a way to really help people that typically are at a very stressful point in their life when they're trying to use their long-term care insurance policies. So we've been doing this for a little over 5 years, and in that time we've secured access to over $175 million in benefits for claimants. And we do that through a very compassionate team that works with our claims that collectively have over 75 years of experience. And they deal directly with our families and are the interface between either the claimant or the adult children and the insurance company. And they do this in a very friendly way that people play back that they almost feel like they have become part of their family because it's done in a very hands-on, non-business style, and they're really the secret to our success. They really know how to navigate the obstacles that the insurance companies throw in front of us and have been extremely successful in helping people use their policies. So to do that, we retain a lot of strong relationships with all the major carriers. We know how to deal with them individually, and they're all different. And as you may know, a lot of those carriers aren't even around anymore. A lot of those policies go back almost 30 years, and those insurance carriers may no longer be in business, but the third-party administrators are actually handling the claims and working to fulfill their obligations to their policy holders. So we know how to deal with all those people as well. And over that period of time, we've handled thousands of these claims. So let's look at what makes long-term care insurance claims so challenging. So the first thing is that the insurance companies can be extremely difficult to work with. The policies are written in a way that are very confusing. If you've ever looked at them, they contain a lot of inconsistent terms. So it's very hard to understand what they're really trying to say. And believe it or not, there's over 400,000 variations of those policies out there. So almost everyone is different. And then as you try to get prepared to do your initial claim, it becomes extremely frustrating to even reach the insurance company. It's not uncommon to be on hold for an hour or to require 5 or 6 telephone calls just to reach a real person to try to deal with the claim that you want to present. And if that wasn't all bad enough 60 days ago, based on everything that's gone on in these companies during COVID, many of them have had to close down call centers. I know John Hancock, as an example, had a huge call center in the Philippines that they had to close totally down, redirect those calls to other people around the US. So it's become even more frustrating to try to reach people. And then, perhaps as in any kind of an insurance claim, claimants are really not versed in knowing what to say when they're talking to the insurance company, or perhaps more importantly, what not to say. So it's very easy to have a misstep and say something that could prevent proper qualification. It could result in the claim not getting started when it should. It could result in the benefits not being used to their maximum. So you have to be very careful with the information that you hand the insurance company. And then, unfortunately, historically, many families end up leaving money on the table that could have paid for that longer term occupancy because they didn't really understand the terms of the policy. So if you look at a summary of benefits page, for example, you have a pretty concise overview of what you think that policy is, but without understanding all the back language that is behind that, it is very easy not to understand how to get the most out of that policy. Some other challenges, as you can sense, I'm sure, many times families are 500 miles away from their loved one and may never have even seen that long-term care insurance policy. So it creates a lot of logistical challenges. And there can be multiple siblings involved, several adult children. So again, it's a very stressful time in the family's life when they're trying to cut through all of this and really understand what to do. And then all these policies have some type of an elimination period. So that an elimination period is really a waiting period before policy payments will start. And they can range anywhere from 30 to over 180 days. And during that time frame, the family has to be prepared to pay out of pocket for that care for their senior that is starting either the in-home care or in your case, with the residential assisted living home. They have to be prepared to pay for that during that elimination period, however long that may be. And then finally, many states have passed laws that override terms of the policies. So over these 30 years, a lot of states have sensed that there was injustice in some of these terms, and they're not all consistent. So you really have to understand in your given state what has taken place that could possibly override some of the terms in that policy. So how can Family Solutions for Care help? Well, the first thing that we do, and this is something that RAL operators can certainly offer to any of their prospects or clients that have long-term care insurance policies, we will do a free policy review. These policies can be 40 to 50 pages long. Again, they're very confusing and hard to understand. But we look at about 50 different data points and all the different interrelationships to determine in the specific care setting what the eligibility is going to be and what the likelihood of payment is going to be. And then we do a free consultation with the family to help them understand what we've learned and how that policy is going to work. You know, specifically, if they're looking at an RAL home, we're going to tell them specifically how that policy at this point in time will fund that care. Now, at that point, many of the families elect to go it alone and they want to start their initial claim. And we're available on a consulting basis on chargeable hourly rate for a couple of hours to try to point them in the right direction if that helps. But most of those families elect to take an optional service that we provide to totally handle every aspect of that claim process. So we will gather all the information to do that initial claim with the highest percentage of success to get it approved on the first try. You may know that after that claim has been accepted and is in place, you actually have to do monthly submissions. So you have to file every single month to keep those payments coming. Many times when information is coming from an invoicing perspective, from a community or from a provider, from a medical provider, it doesn't take much for there to be a small mistake that can actually interrupt the payment of those policies. If that happens, we deal with the reinstatement and we help get those payments flowing again as quickly as possible. And we have many families that have even gone it alone and been denied, and we'll take that on as well. And we have a very good rate of getting that turned around. Again, because we've done so many and we know how to communicate with those insurance companies in their own language and in their own terminology that's in those policies. But with the service, we literally take on all communication with the insurance company. So the family never even has to speak to the insurance company. And so the way we get started is we do a limited power of attorney and a HIPAA document with the family. And then we go off and obtain all the required medical or provider records that are needed to build that all-important initial claim. And as we mentioned, with the difficulty in getting hold of the insurance companies, as you probably know, it's just as difficult to get a hold of a lot of the medical providers and the physicians to work with their offices to get the medical records, to get them in the proper, HIPAA-approved formats, and to gather all that information. It's often going back and forth multiple times and sending reminders. So it's something that we take on that entire burden, and we gather all that information, and we keep it all in a single place. So it's all in a HIPAA-approved system where whether the family would need access, the insurance company, but where we have access to all those records at all times in a single place, highly secured. Now, one of the most important things we do is that we actually go back 24 months to look for either medical or life event triggers that could have started that policy paying sooner. So many times there have been, leading up to the point when the senior is ready to go into residential assisted living, there have been other events that led up to that point. It could have been some type of medical care, it could have been some type of rehab, it could have been some type of in-home care, but many times the family or the claimant hadn't recognized that some of those things may have been covered under that policy. Could have been care that wasn't properly documented, so no one realized it. So we go kind of through a thought process with the family to coach them in the looking back as far as 24 months to help us understand what else has been going on. And when we do that and find those things, it actually starts that policy sooner. So that provides a retroactive refund to the claimant. It also, equally important, satisfies the elimination period. So that reduces the out-of-pocket expense. So let's take a look at that from a graphical perspective here. So in this example, we have said that where this vertical black line is the point in time when the residential assisted living home is going to admit the claimant. We've assumed in this example that there's a 90-day elimination period. And just as an example, we've taken an average cost of $5,000 a month. I know that may be a little high, but that in this example, that would mean that the family would have to come up with $15,000 during that 90-day elimination period in order to pay for that care from this point forward. Now, to the left of that line is where we go back to 24 months, and we look for these triggering medical events, and we typically find them. And so when we do, and we're able to get that policy started sooner, on average, our 5-year experience is that the claimant receives $23,000 in their very first check. So some people are going to receive a lot more, some people will receive less, I know recently I went through and I saw an example where someone had a policy that had a fixed weekly benefit amount. And we were able to go back and find something that triggered that policy 11 months back. So those folks received a check from that insurance company for 11 months worth of those weekly benefits. Now, if prior to that being started, if the claimant did go into the care facility and they did pay that $15,000 during that elimination period, because we were able to satisfy that elimination period by going back farther, they would also receive a refund of that $15,000. So you can see that the initial cash refund could be sizable in these situations, and it's simply based on having done so much of this and knowing how to talk to the insurance companies and knowing what these policies really say that we're able to accomplish this. So what does that result in? You know, we've said several times that it's a very stressful time for the family, and you know that it is. But the number one thing that people tell us is that it's the saving of the time that they find the greatest value in. So by doing this and taking on the entire process of dealing with the insurance company, we're eliminating all the time and stress of the family having to deal with the insurance company and the medical providers. You know, and as we saw, it also greatly reduces the possibility of making mistakes. And those mistakes can result in a delay in the start date, less of a benefit amount, or that interruption to the continuation that we talked about. Statistically, when families gather the information on their own and file that initial claim themselves, they are successful on that first try less than 20% of the time. And when we're involved from day one, and I'm not saying in the case of necessarily of a denial, but when we have all the information and we've gathered that and we've dealt with the insurance company from day one, we are at almost 100% of the time that we get that initial claim approved on the first try. So, it's kind of like when, if you're going to go to a doctor and you were concerned about having some type of a heart condition, I mean, you don't want your general practitioner to be the one that you get the expert advice from. You want to see the cardiologist. So that's kind of how people view us. We're the experts in this area of long-term care insurance claims. That's all we do. We do it all day. We do it every day. So that takes a tremendous burden off the family at this point in time. So as we saw, that also has the effect of either reducing or totally satisfying the elimination period. So it reduces the out-of-pocket costs to get that senior moved into the residential assisted living home. And then because we found that extra money and we can ensure that they're going to receive the maximum level of benefits, we're going to ensure that that claimant will be able to have the longest duration of occupancy in the RAL home. So it's just a tremendous peace of mind at a time when it's so important to that claimant and that family. So we're going to have 3 or 4, maybe max, additional slides here. So I would say that if you have had some questions come to mind at this point in time, you might be thinking about asking them. This would be a good time to start. If you're going to go to the question box on your dashboard and start inputting any questions you may have. But right now I want to talk about our partnership with RALNA. So with the National Association, we are a sponsor, and if you go out to the Marketplace directory, you'll see, as you do here on the right-hand side, you will see us listed under the Insurance tab with a very high-level reminder of who we are and what we do, with our contact information, email, website, and you can see on our website a lot of additional information, customer testimonials from families. And at the end of the presentation, you'll also see my personal contact information. And you'll feel free to reach out to me as well. I'm very happy to help you in any way that I can or answer any other questions that come up after you've thought about this for a while. But this is some of the benefits that we believe our partnership with the Real Estate Assisted Living National Association brings. So one of the first thing it does for operators is it really helps eliminate any liability related to providing advice on long-term care insurance policies. So as you probably know, you don't want to be giving legal advice, you don't want to be giving accounting advice, and with the long-term care insurance policy being just another financial instrument, you don't really want to be providing advice on that policy. So when we take over that responsibility, we take away all of that potential liability. And in this day and age, especially during the continuing COVID situation, certainly it'll continue post-COVID. Hopefully we'll have a post-COVID soon, but there are going to be a lot of litigation issues, and reducing that by one more thing can be a big help to the operators. The next thing it does is when you're talking to prospects or networking, I mean, it's an additional conversation starter. So you have something else to talk about to anyone that has long-term care insurance, or you can simply to ask them if they happen to have long-term care insurance, because you have a partnership with a vetted partner that can help anyone that has long-term care insurance and can do those free policy reviews to get them pointed in the right direction. So that really helps you enhance your level of customer service by being able to extend our specialized services, to your clientele, to your prospect base, to any of your contacts. And then this provides a value add to that whole facilitation process of getting those clients placed in your residential assisted living home, because it helps both you and them understand their funding options. So you'll be able to understand what's available, how it will pay, and what those maximum options will be. And certainly through our ability to be able to go retroactively and find them additional refund money and satisfying the elimination days, we help that client move in sooner and typically stay longer. And then finally, it really helps the community operator be paid sooner and to reduce their AR collection risk. So we have helped firmly understand where that funding is coming from, how much of it there's going to be, the care setting in which it's going to pay. And because we've gone back retroactively, we can get you paid sooner, and we can ensure that you're comfortable with how that funding is going to work going forward. Now, one of the elements of our partnership is that we have actually built, we call it a landing page, but it's a resource page for all RALNA members. And this is what it looks like here off to the right. So you can see that there's some different elements on here. We have a brief 2-minute video that talks about what we do. We have some of the highlights of the things that we've talked about tonight that kind of give you a general idea of what our process is and how we help. This can be used for a refresher on who we are and what we do. It could be used to help train some of your associates or any new employees that may start. Down at the bottom, we have some downloadable resources. So you can download a client brochure. And I'm sorry I don't have an example of that, but it's a PDF that's designed, one-page flyer that simply talks in the language that a potential claimant would understand of what we're able to do to help them. On the other button here is, we'll take you through kind of a 12-step understanding of how that policy review works. So again, it all starts with the free policy review. So that will help you understand that process a little better. Over to the side here, if you have any prospects or clients to refer to us, then this allows you very easily to put in your information and the claimant's name and contact information. And when you send that to us, it comes directly into us, and we will contact you first, and we will let you know that we received your referral, that we want to help your client and get any information that you can share with us that would help us be able to communicate more effectively with that client. And then we will call the family and we will start having the conversation with them, talk them through getting us the copy of the long-term care insurance policy. And again, many times these policies are 20, 30 years old, and sometimes people can't even find them, but they may remember the insurance company. Sometimes the family doesn't even have a clue as to where to find the policy. So we have some techniques that we've developed over the years to try to help them kind of think through, for example, well, go through mom's checkbook for, the last 12 months and see if you see any recurring payments to an insurance company. So different things like that we can help them think about to try to find out where, if they don't know who the insurance company is. If they do know who the insurance company is, many times we'll just do a three-way call with the either the claimant, the policy owner, or the family and the insurance company, and we will guide them through the process of having the insurance company locate the policy for them. So this is the URL down here for that resource page. So again, it's branded with RAL National. You can go back to this as many times as you want to brush up on this information, or to hopefully refer one of your prospects or your clients so we can help them better use that policy and to better maximize their benefits. So you'll find that all of the people at Family Solutions for Care really have this sense of wanting to help families. And if you listen to some of the testimonials, and I see and hear a lot of them, you'll find that that's a common thread, that it's really a privilege for us to serve the families that you bring in and you refer to us. And we're very happy to do that in the most conscientious and the most professional way. You can learn a lot more on our website, which is FamilySolutionsForCare.com. This is the main number. You can call in, and anyone at this number can help you with any questions or concerns that you might have. But again, please feel free to reach out to me personally. I'm very happy to answer questions or to respond to emails or to point you in the right direction. And this is my email. And then again, revisit the resource page often, because as I said, we add things to it all the time. You will find here in a day or so, a copy of this webinar will be posted there, so that as another place you could go to re-listen to it or to point one of your associates to it to be able to go through it again. So that brings us to the end of the presentation. I'm certainly willing to answer any questions if I may, and if not, please direct them to me at your convenience anytime you choose. I greatly appreciate you being on the webinar tonight, and we're here to help you in any way that we possibly can. So thank you. Molly, back to you.
All right. All right, so it looks like a couple of questions are probably the same, and it says, please share with us the payment structure for your services, or in other words, how much does it cost?
Yeah, so remember, the initial cost is zero, because we're going to do that policy review and that family consultation to really understand what it is that policy is going to provide. And based on that, we'll understand the complexity of what we need to do. So, again, it's kind of like going to a doctor for a diagnosis. He's really not going to know ahead of time what he's going to have to prescribe or what it's going to cost. So it's very difficult for us to really do that. But I will tell you that, we can work at a level of an hourly consultation rate just to help a little bit, or we can take on the entire process. And in order to really nail down what that cost would be, we really need to look at the policy and talk to the family first. But I will tell you this, it is not exorbitant, and it could be in a range of maybe slightly over $400 a month. And we have 90% of the families that ever utilize our services will renew for an additional year. The average life of these relationships is about 2.5 years. And during that time period, we are typically securing scale of magnitude about $250,000 in benefits for these families. And again, the average person is going to receive $23,000 in that very first check. So hopefully that gives you a little bit of an overview, a little guidance of a framework.
And that's a great segue into the next question. It says, what is and where is this refund money coming from? How did this money come about?
Okay, so the money comes about because as we go back 24 months looking for these events that would have triggered the start of the policy, at that point in time, you're not starting today with the 90-day elimination period, as we took that as an example. We're not starting today with that in front of us, but we're going back to some point in time where we found one of these events. Had it been properly processed then, it would have started payment under the policy then, and would have paid for that care that the family has already paid for in some other way. So that will be refunded. And then the elimination period, if satisfied, but if the family has had to pay during that elimination period because they had to get their loved one into the residential assisted living home right away, it will refund that money as well. So that is just money that's due to the policyholder, and it's being received retroactively because the policy hadn't been started earlier. So in many cases, we hear from families. In fact, I just heard this yesterday. Quite an upset adult child was saying how the policy had covered her mom, who had been in a memory care unit for a number of years, and that her dad was close to needing to be able to go into an assisted living facility and use that policy as well, but that she recognized that he probably wasn't going to be there long enough to reap all the financial benefit that had been paid into that policy. So by going back in time and finding this retroactive money, we're assuring the family that they're going to get as much of that upfront as they possibly can, which can help with some of those other expenses as they go forward. So do we have other questions?
Yeah, there's one more question here, and it says, I assume the family pays that fee, correct? The fee that you would charge to help?
It does. Now, so the residential assisted living operator does not pay it, but it is a policy owner funded program. I will tell you that there have been cases where, whether it be a community or an in-home care firm, or I don't know that we've had any experience with a residential assisted living home yet, but where they have opted to pay that on behalf of the resident because they saw that the benefit to them was, getting payments started to them sooner with a certainty that the future payments were going to flow. And because we can see how to maximize those benefits, they may be able to provide a higher level of care than they were originally planning on doing because the benefits are available to pay for that. And we identify that in that process.
And that's exactly what I was just going to say. I've heard many times that people who have long-term care insurance, they don't understand the maximums that pay out per day. And so if they just could get somebody to explain the program to them, they could have a higher level of care in your home, and AKA you could have a little bit more revenue from that resident because they have long-term care insurance.
The other benefit is, and it may be a little less impactful because I'm assuming in a residential assisted living home, there may be 5 to 15 residents in that range. So, but if there's any resources at all that have to be dedicated to dealing with the insurance companies and gathering information and going back and forth, or with medical providers to get records to help process, monthly invoices to the insurance company, when we take on that responsibility, then the operator no longer has to use those resources and they can be redeployed. So we find in larger communities, of course, where they have people that are doing this all the time, there's a lot of personnel expense associated with this that can be redeployed. And a lot of it happened, by the way, during COVID, when many of the facilities, and I'm sure some of you experienced this as well, had to redeploy some people from different areas of responsibility to become caregivers and to help deal with some of the issues that residents may be encountering. But we take on that entire responsibility of all that administrative handling of that kind of data. So that could be a kind of a hidden value to the residential assisted living operator as well. Anything else?
Here's another great question. Going back to what I just said about pay per day, what is the average pay per day that you see from long-term care insurance?
Yeah, I don't know if I have a number to give you on that. I mean, the policies vary so much.
Absolutely.
But when we say that the average life of these policies is typically worth about $250,000, then we say that could be up to $8,000 a month.
Right.
Now again, that's an average, so it's going to include some higher. But one of the things that you find, and you may know and may have found this already, but typically the people that have long-term care insurance may come from just a bit more affluent demographic, and the adult children that are dealing with helping their loved one are typically very accustomed to paying for services, and they value their time. So as I said earlier, that the valuation of their time in dealing with all of this is one of the prime motivators to wanting to use our service.
Absolutely. Yeah. And going back to your average, Jose, I think that $150 per day sounds pretty average. There's probably policies that go higher and lower than that. Of course, there's a wide variety of them, I'm sure. There's one more question. Is there a difference in how the insurance company sees an assisted living versus a nursing home?
Very good question. There can be a big difference. And part of that, when I mentioned in some cases that there may be state laws that have been passed that override some of the terms in the policy. I mean, some of those carriers did have, especially the ones early on that had been writing these policies back in, they go back to the 60s, but where they were discussing the services provided by a nursing home. And there really wasn't, an assisted living industry per se at that point in time. So we have learned how to deal with those specific companies and with that specific verbiage. And many times we're successful in getting that turned around. If it's not a law of some type that's been changed by the state that's mandated that it be looked at differently, then we often are very successful in working with the insurance company, ensuring that it gets looked at differently. There's a lot of precedent for that. I won't say it's every time, and it's certainly not every company, and they're all very different. I will tell you, and you probably recognize this, that those companies back when, in the heyday, when they began writing this type of coverage, certainly did not understand all the actuarial assumptions that they were going to be faced with some 30, 40 years later. So they are very hard pressed and make it evident that in many cases, they make it extremely difficult and almost give you the impression they don't want to pay. And that's why it is so key to have someone that knows how to deal with them and knows how to deal with the terms in those policies, that can push back and knows how to get this stuff done. Because you're right, the nursing home is a good example. I mean, there's just a lot of content in there that is somewhat open to interpretation. So you really have to have experience in using the right language and knowing how to go after that on behalf of the claimant. Anything else?
Yeah, that looks like that was our last question. Those were some great questions. So thank you so much for coming in with us today. And thank you everyone for being here. Just to give a quick side note, we won't have another webinar until the second week in July, yeah, it's June. Oh my gosh, the months are flying by here in quarantine, right? So I will see you guys the second week in July. And just so you guys know, anybody who isn't a Premier member, our Premier members can get entered into a raffle to win a $300 air purification system up until 4th of July, so up until Saturday. So if you guys were thinking about signing up, go ahead and sign up for that Premier membership. It's only $199, and you could possibly win that $300 air purification system. So once again, thank you, Bob, and I will see you guys next time.